Testing. Ooh, spicy. I don't have glasses. Can you see in the camera? Are we both in it?
Yep.
We're good to go?
Yep.
All right, cool. Welcome to the first edition of our new little quick podcast called Ransom Notes with myself, James Ransom, and Davis Brode. And we're going to be giving you pretty much an ultimatum to give us money to get your daughter back.
Or your household.
Or your house sold. Today we're going to be talking about the market, just because there's a lot of weird shit going on, and I don't know if you follow many realtors on social media, you read the news, a lot of conflicting information out there, and everyone seems to think that we are in one of the hottest markets of all time, and me personally, I think we're about a month or two past that. There's definitely been a slowdown from what I'm noticing.
Oh, for sure.
Pull your mic a little closer. You know what? So definitely been a little bit of slowdown in the last past maybe 1 to 2 months, and it's nothing that you're going to see in the news. And the reason being is when you're on the ground and you're interacting and doing these things, you're going to get offers on a property 30, 45 days sometimes before it actually closes. So when it closes, that's when people get the data. But us realtors, we sense it as it's happening, usually about a month or two before. So I have a feeling you're going to start seeing this in articles here and there.
Yeah, and I think it's hidden too by the fact that we're going into spring and summer, which is traditionally the busy season.
Yeah. And so what happens when inventory increases?
Prices go down, offers go down.
It's just super simple. When there's more to choose from, it's like basic economics 101, supply and demand. When there's a lot more of the supply, the demand decreases. They are literally on an indirect correlation. So when we have that happen, and we're maybe about less than a week out. It's spring break is always that last. Let's get the family out. Let's do some stuff. I don't know if COVID's going to affect that a little bit differently, but next week and the week after, I think you're going to start seeing people start to prepare to get their house listed on the market, prep for a sale, which they should try to gauge to end around June. Again, this is not a traditional school year.
Yeah.
But and at that time when you see that influx, and obviously a shit ton of people have purchased already because rates were already at their lowest.
Yeah, those are starting to go up, but we are seeing more. Like, I know I've been watching Seal Beach really intimately because I have a client that we've been searching forever and there's nothing there. There's 2 today.
2 new ones?
Yeah, there hasn't been 2 in a long time. There's been like 1, then a few weeks later, maybe 1 more. So I'm starting to see more. And that's a really small area that I'm looking in.
Yeah, and I was going to say, even I'm sure if we pulled Orange County, Huntington Beach, or it's really hard when you have like a really small farm. Like mine is downtown Huntington. I kind of pull from different areas where I have clients, like Dover Shores, Newport Heights, Seacliff, Huntington Harbor, but I map it out to where it's not like the whole entire geographic area. So mine, I see the same thing. There's been a definite increase in listings, and then the number of active under contracts is pretty close to the number of active listings coming on the market, but the number of closed sales is slightly below both of those numbers. And all that indicates is that it's as more inventory builds up and less houses are closing, you're going to have more inventory.
Yeah. I think we should also talk about the process over the last 2 months, what it's been like for buyers in that sub-$1 million price point.
Yeah, so that's one of the things that kind of made the light bulb go off for me is I've had 3 listings all within a few blocks of each other, all 92646 South Huntington Beach. And the first listing I had about, 20 plus offers. That closed, picked up another listing maybe a couple weeks after that. We got 11 offers and picked up another listing after that closed maybe 2 weeks after. And we had 4 offers. And it's the amount of people out there that are trying to compete for homes. And I know there's going to be different things. There's going to be location, sizes, how nicely the homes are upgraded. But all of them were pretty similar. Not fully upgraded, but they all had a lot of really great upgrades. The most recent one that I did get lower offers on, it was on a major street. But again, I should have had a little bit more of an influx because it was priced appropriately for being on a major street. That, and then, I mean, I kind of want to talk about interest rates. Uh, Back in the day, interest rates were at 4%, maybe 5, 6 years ago. Like, that was what I told people. I said, look, if you're getting even just a $500,000 loan and your interest rate goes from 4 to 5%, which isn't crazy. I know 1% is like a big jump, but they've already gone up a half a point over the past maybe 3, 4 weeks now. And that increase actually happened in a 2 week period. So it's not out of this world. And if you get one of those buyers that they want to wait and they want to see the market change or drop, or, I mean, I've been in this industry since 2011, 2012. So I've only seen an increase in the market. I cannot frickin' tell you how many times people said, I'm just going to wait till the market slows down. Every single one of them ended up paying more. And over the course of when rates hit that like 3%, 3.5% low, maybe about 7 years ago, I mean, this is the coronavirus. Coronavirus didn't happen.
Yeah.
They wouldn't have gone down to close to 2%.
No, and I don't think they're going to go up crazy from now. Just don't see how they can. But yeah, there was a steady increase, and even that 0.5% slowed everyone down.
So, yeah, what I was getting to is people don't want to pay that extra $20,000 on $1 million property. But I just used a $500,000 loan amount just to show people what the difference is. When you have a $500,000 loan amount and your rate goes from 4% to 5%, you end up paying a total of $120,000 difference in interest. And so that's what I would tell people. It's like, if rates continue to rise and you're kind of on the fence about spending that extra $20,000 to lock in your 4% rate, and rates do continue to go up, and again, none of us have a crystal ball, but they're going to go up at some point.
Yeah, they have to.
We've been at record lows for entirely too long.
Yep.
And you're going to end up paying $120,000. Well, that's gauged over the 30 years. And I was like, yeah, well, if you look at how loans are amortized, they're all front loaded. Your first payment is essentially all interest, and then your second payment is a little bit of principal and mostly interest.
Yep.
And so when most people in Orange County live in a property for 5 to 7 years, you are paying the majority of that interest up front in the first part of your loan. So you cannot use that, well, over 30 years, if I'm only there for 2 years, I'm really not paying that $120,000. You're paying a lot of it. And so if I had to choose between overpaying and getting a low interest rate, or waiting and letting an interest rate rise a little bit but getting a little bit better discount on the house, it's a no-brainer. And so for those of you out there having this conflict or discussing it with the realtor that, in my opinion, should have already brought this up to you, then I would definitely reconsider putting your best foot forward the next time you make an offer on a house.
Yeah, the interest rate and the price homes, they're all relative. If interest rates rise, price homes will come down a little bit. Either way, you're paying it.
Yeah.
And with what we've seen over the past, call it even 6 months, all these record sales are just creating new price points. So now
Absolutely.
that $700,000 house is $800,000. You're not going to make interest that quickly.
No.
You're not going to save on it. And the cost of waiting for a lot of people is way more expensive than it is to just buy. But that comes down to, what are your needs? Are you buying a home to flip it? Then yeah, you probably don't want to be in a bidding war.
Yeah.
Are you buying a home to live in, to enjoy, to raise your family? Then if they go down, if the market you're waiting and your house goes down $100,000, trust me, in 10 years it's going to be right back up.
And probably beyond.
Yeah.
So I think that's a really interesting point too, is we're lucky to be in a market where we're coastal Orange County. You're never going to see this area tank. There's just no place left to build to increase that supply, which of course is what usually lowers. But if you're, an agent or you're buying out in Victorville, fucking wait, do your thing. You may lose money on it, but here it's never going to happen. If you are willing to hold a property for 5, 7, 10 plus years, you're gonna make money. And when you do, you're gonna be able to roll that equity into the next property. And I don't know, I just don't see a lot of downfalls. If you're looking in Huntington, taking advantage of low interest rates versus looking so in depth at that price point, trying to overanalyze it, you're gonna be losing out on the opportunity cost.
Yeah, the only reason I see waiting right now is if you're not finding what you like, and then wait for inventory to go up.
Yeah.
But I would not advise anyone right now to wait based on price.
No. and I agree. So, anything else you want to add?
I don't think so.
All right. Well, quick little ransom note for you. I hope you found some valuable information out of this. And if not, then don't watch the next one. But have a great day. Do we have like a sign off saying or anything?
We'll sell your house real quick.
I was thinking like Seacrest out, or no, that's 10 years ago.
No, he is out.
Oh shit. It looks great.